Hey guys, welcome back to another video, and today I'm here to talk about three non-tech stocks going into this stock market season. We're coming on November here, so I'm here to talk about three stocks that are not in the tech space that still have the chance for returns just as big, if not bigger. If you guys do enjoy this video, be sure to smash that like button. Also, subscribe to the channel. I really appreciate the support. We are nearing 1,200 subscribers. Thank you guys so much. Let's get right into it. So, bad day in the portfolio today, but not worried about it. And year to date, we are still up 65%, over $10,000. So the first one that we're going to get into today is none other than Celsius, ticker symbol CELH. I'm making this video because, these tech stocks, AI stocks, very volatile companies. Not to say these aren't, but it's also a space that moves as a unit. If Amazon goes down 10%, Google is also probably going to go down a large percent. So I want to get kind of out of that space and diversify our portfolios here. So Celsius, the first stock we're going over, I'm up 123% on Celsius right now. We go to their all-time. They are not at an all-time high. They are, they've been on a nice run here, but they're not at an all-time high. Their all-time high is actually, if we go past 5 years, we see it's around $95. So pretty high, but the stock is only 61 right now. There's still a lot of room to run. We're going to get into the investor presentation right here. If you didn't know, Celsius just picked up Alani Nu, which is a very popular energy drink company. Basically, Alani Nu is targeted towards the female consumer base. Also, Celsius did actually just pick up Rockstar Energy, so now they have 3 energy drink brands in the energy drink category, and all of these, there's a big stake by Pepsi in these companies. They know what they're doing in the drink space. Let's check out Pepsi stock real quick. I'm not saying to invest in Pepsi, but they definitely know what they're doing when it comes to beverages. They have over a $200 billion market cap. So there's no question there that they know what they're doing. They're a category growth leader. Celsius contributed to almost 25% of all energy drink category growth in the first half of 2025. They're the number 3 energy drink portfolio in the U.S. with total U.S. share of 16.8%. So there's a lot of impressive stats from Celsius here. Also, their first half financials, we see revenues of over $1 billion, margins of over 50% on a beverage is insane. Net income of over $100 million. We see a lot of great stats here. Number 2 portfolio brands, love to see that. Number 9 in all of liquid refreshment beverages in the U.S. This brand is number 9. Number 2 in growth and $4 billion in retail sales. These are some of the products that they offer. These are all of the Celsius products, along with some sticks that you can put, powder and water and create your own Celsius. Same thing with Alani Nu. They're also kind of offering some pre-workout and also some protein. So very impressive there. The investment thesis with this, a leading portfolio of premium lifestyle energy and hydration beverages. They're talking about a lot of things here. Don't want to get too into detail, but basically Celsius's branding is why you're buying this company. They offer this branding that makes their drinks look very healthy. Honestly, they're not the healthiest drinks in the world. I'm going to be completely honest with you. They're not that good for you, but they do have a lot of, aspects in their branding. This color, the logo, nice and clean. They make it look very healthy, very good to drink for you. And same thing with Alani Nu, both of those, but they're not really. So, that's the brands that do the best have that marketing. Same like Trader Joe's. There's a lot of organics at maybe Whole Foods that people love to buy. They're willing to pay that premium because they have branding that makes it look healthier than it is. Their growth strategy, they're attracting new customers, expanding product availability, and increasing consumption frequency. Not good for you, but not worried about it. Celsius, I'm not a moral investor. I'm also not an immoral investor, but I do definitely, want to make as much money as I can. Key messages in quarter 2 here of 2025, they had record revenue. Portfolio surpassed $4 billion, first time they've done that. And then their brand delivery over 129% year-over-year retail growth and added 3.1 points of share. So really love to see that as well. Alani Nu seems to have been adding a very good percentage, revenue and profit to this company. And also the most impressive thing about this company, I think, is their gross margins are very high for someone that's selling not a service or not, like they're selling a physical product. It's not, a web service or something of that sort, or, like some entertainment thing. They're selling like a physical product that you consume. And their gross margin is over 50%. So they have a competitive advantage on the market selling a thing that a lot of other people sell, which is very hard to do. It takes, a big team behind you like Pepsi. Celsius Holdings is growing the energy drink category. We see this is major jump in growth. This is mostly due to acquiring Alani Nu, I think. They're also just growing, as it is themselves. We see the Celsius portfolio is actually catching up to Monster, very close there, quarter two change. So we see that Celsius actually made more than Monster, but Monster does have more share in the energy drink category. So basically, it's just these big three dogs: the Celsius portfolio, Monster drinks, and then Red Bull. Red Bull is on top by a lot. Monster is kind of near there, but second place, and then Celsius is a close second. And then after that, you get to C4, Ghost, and then Rockstar recently acquired by Celsius, so that you can add that to their share as well. They're getting very close to Monster. I think that's going to be someone they surpass very soon here, and then I think Red Bull is going to get surpassed as well. Revenue, crazy jump right here. This is because of the acquisition. Revenue in millions, you see it jumped from all the way, it was just over 300 million to over 700 million, so more than doubled in a quarter. Pretty insane stuff. You can see the same thing right here, up 84% revenue in the last 5 quarters. International sales, we see that international sales is also increasing. Love to see that. I do think that international is the future of these companies. Gross profit, that is nothing to do with Alani Nu. Gross profit is just increasing because why not? Really love to see that. Also, appendix, we see Celsius is, some more nitty gritty financials right here. They're also gaining, they were in debt this time last year in a lot of aspects of their business. Now they're not. So growth rates really are beginning to run for this company. And that's pretty much all for Celsius. I just wanted to go over their investor presentation. The main thesis on this company is the growing popularity in gym culture. And a lot of, people like Celsius a lot. People really love the drink. I used to drink a lot of Celsius. I don't anymore because it is not the best for you. But I think it's also not the worst for you. There's worse things you could be doing. Celsius is addictive. I know people that drink 2 Celsiuses a day. But their marketing is amazing. They're marketing to the biggest consumer base, in my opinion, people that love to spend the most money, college students, young adults. They market this to them, and it's very popular on college campuses. A lot of advertisements going on for them. A lot of gym culture on those campuses. I go to Santa Cruz. The gym, there's always a line. Everyone's drinking a Celsius. They're the most bought drink in a lot of the stores here. Just very popular beverage, Celsius is. So I'm very happy to invest in this company. This is more of a social investment. I can tell that the company is gaining market share and they're increasing in value as they do that. Also, I think the strategic acquisition of Alani Nu was very smart for this company, and their partnership with Pepsi is amazing. So I think you could be scared to invest in this company because they ran up. Yes, in the past year they're up 89%, and year to date they're up 130%. But you also have to realize that they've also dropped from where they were before. They were at $95. They're only $61 right now. So they also dropped over 30%. So you have to keep that in mind when investing in companies like this. Is yes, they are at an 52-week high, but they're not at an all-time high. So if you're investing in this for the long term, I wouldn't be worried about that aspect. The next company that we're going to get into is none other than Cheesecake Factory. This is a stock that I've been buying pretty heavily, over the past couple of weeks because this stock is getting cheaper and cheaper. It looks like it's actually in the past week ran up a little bit, past month maybe. But this stock is on, kind of a downward move, surprisingly. Down 12% in the past 3 months, but still up 17% year to date. With this company having a low price of $44 here in 2025. That's where I was buying a lot of my shares. But I have been dollar cost averaging up. We see I'm up 18% on the stock. I've been up, as much as 50% on this stock. Their PE ratio is the main reason to buy this company. It's 17. They do have a competitive advantage. Their market cap is $2 billion only, but the competitive advantage for this company is not Cheesecake Factory. If we look at their investing presentation, their competitive advantage is North Italia and Flower Child and Fox Restaurant Concepts locations. They have a market cap of $3.2 billion, a revenue of $3.6. Their revenue exceeds their market cap. Their PE ratio is 17 for a reason. Cheesecake Factory, they also have global footprint. They are expanding internationally, 34 licensed locations. Love to see that. I think that is a huge money driver for them. Bringing Cheesecake Factory locations international will gain a lot of money for them. A lot of other things that they're doing. My favorite thing that they are doing is North Italia. So North Italia and Flower Child are my favorite things that this company is doing. That's the reason I'd invest in them. I don't like that their ticker symbol is CAKE. I don't think their ticker symbol should be cake. I think that's a horrible misrepresentation of their brand because this brand is North Italia and Flower Child and Fox Restaurant Concepts. I think FRC, I mean, a stock already has that, but something along those lines would be a lot better for this brand. So North Italia is basically an Italian restaurant. They have an average check of mid $30 to mid $40 for dinner. They have potential for 200 domestic locations over time. This is the same size as Cheesecake Factory. So imagine Cheesecake Factory's revenue right now, just double that. They currently have 46 locations in 16 states and Washington, D.C. Italian is one of the most popular ethnic cuisines in the United States. Cheesecake Factory is very Italian. They have some of everything, but Italian is a very popular dish for them. They're targeting 20% average annual unit growth, very high number right there. I'm very happy with that. And also they have an attractive return profile and sales growth. We can see that in their numbers later, but I mean, very good company right there. Flower Child. I'm even more excited about Flower Child. Flower Child has the potential for 700 domestic locations over time. Yes, 700. That's a lot of locations for anywhere. A differentiated concept in the growing fast casual dining segment. 42 locations in 15 states as of right now, and they're also targeting 20% average annual unit growth. This can grow fast because 10% of that is 4, so we double that. That's 8, 20%. So if you add 8 locations a year, and this is, all compounding, and you're going to get eventually, they're going to be adding, 20 locations a year at Flower Child. I really love to see that. They have a healthy, balanced dining experience. The menu features customizable bowls, wraps, veggies, and healthy proteins. You see they're also offering organic, gluten-free, and vegan dishes. Have some friends that are, organic, gluten-free, vegan. That's what they care about. People are willing to spend more for this. The products do cost more as well, but not as much as people are willing to spend more. People are really willing to, fork over some more cash for these type of products, which is great for this business model. And I think that health is becoming increasingly popular, as it should. I mean, health is wealth, but people are really starting to care about their health a lot more. And as time goes on, I think this is going to be a trend that keeps up. And Flower Child is going to be right there as one of the healthiest options to eat it, one of the tastiest, very good food there. And also their environment is great. So I really like Flower Child. Also Fox Restaurant Concepts. This is how they found out about Flower Child and North Italia. There's probably more Flower Childs and North Italias from where this is coming from. We see that this is their chart of where these restaurant brands are at. So Cheesecake Factory has the global footprint. It's been around forever. They have the money-making code for Cheesecake Factory. They're a cash cow. And then they have national expansion. This is North Italia, Flower Child. These two companies are expanding nationally as of right now, just like Cheesecake Factory was once. They're doing this again. Culinary Dropout, Blanco, and the Henry are testing growth. These are companies that could very well be the level of North Italia and Flower Child. I wouldn't be surprised if they are. And then also they have boutique brands. These are the incubation stage restaurants. So they're seeing if these ones are going to be as successful as Culinary Dropout, Blanco, and the Henry. And if so, then those are going to become the next North Italia and Flower Child. They're building a restaurant monopoly here. I think a lot of restaurants in the future are all going to be owned by Cheesecake Factory, and people are going to wish they had a piece of the stock, piece of that cake, if you will. But accelerating unit growth, as many as 25 new units in 2025. I think 10 years from now, at this time, for this earnings presentation, we're going to see the Cheesecake Factory as a company opened over 100 units as of halfway through the year. I think that's very possible and very much what is going to happen. It's just as the numbers start compounding, that's what's going to happen. Financial performance. So we see that fiscal year 2024, quarter to 2025, Cheesecake Factory is up. Not a lot. They're not up a lot of money, but you got to remember the margins in this restaurant space are paper thin. There's not a lot of room for error in this. You have to make, a little bit of money to even profit. We see that, North Italia is down 1%. They're still profiting 1%, but while they're expanding this aggressively, obviously they're probably not going to make a bunch of money. This is more of a future play, it's a long-term play. I think 3 to 7 years you're going to be really happy you invested in Cheesecake Factory. You're not going to wake up tomorrow and be stoked that you invested in Cheesecake Factory. Maybe you are. Maybe a hedge fund is going to, add something with Cheesecake Factory and say, oh, we're going to, buy Cheesecake Factory. Their target price is $100 and the stock rises, 20% in a day. But that's not why we're investing in Cheesecake Factory. That's not exactly what we're looking for. So Fox Restaurant Concepts, we see that this is a main thing in their business as well. They were down 4% last year in weekly sales. Now, 2024, quarter two, they're up 2%. So very happy to see that. That is a 6% difference. They're doing very well with FRC there. Quarter two 2025, their total revenue, they're up 6%, 956 million. Very happy to see this. 8 NROs, love to see that, new units. And then the restaurant count, 362. This is up 6%. in the past year, and it's only July when they made this, so there is more restaurants as of right now. And then another metric that I wanted to go over was their new unit growth targets. Annual unit growth for Cheesecake Factory is only 2 to 3%. This is a pretty established brand, pretty big. The fact that they can even still add more units at this point is impressive. So I'm not worried about that. I don't think that's the biggest growth opportunity in their company. I think North Italia and Flower Child are really where this company is going to grow, along with Fox Restaurant Concepts, where they're going to find those growth concepts and create more. I think we're going to see a list of maybe, 2 or 3 more in the next 5 years of these North Italia and Flower Child level expansion companies. It's going to be great. And then also they have potential for $5 billion revenue growth potential. I think this is going to happen sooner than we think. Look at how small Flower Child and North Italia are on this, revenue as of right now, and how big Cheesecake Factory is. This is very conservative in my opinion. I think that this is going to be a lot bigger than it actually is, but this would require the stock to 3x to actually be valued at this. And their growth rates being that much better, opening all these new restaurants, their PE ratio is probably going to be a little bit higher. So if we look at a lot of other restaurants that are growing at these levels, Chipotle's PE ratio is 37. If we look at Wingstop, another very popular restaurant that has that kind of growth rate, is their PE ratio is 44. And then if we look at Texas Roadhouse, let's see their PE ratio. I don't think it's as impressive, but it is still 27. So I think Cheesecake Factory at least has a potential for 5 more points on their PE ratio, if even. I mean, I think they can get a lot more than that. I think 10 to 15 is more accurate. I think they should have at least a 25 PE ratio pretty soon here. That would require their stock to go up around 50%. So do I think that's going to happen? Yes, I think it's going to happen very soon. The PE ratio going up at least, the stock price should follow, and I think that this is going to be a very expensive stock in the near future here, and you should try to get in while you can. So Cheesecake Factory, one of my favorite stocks in the stock market, very happy to invest in this stock and buy more as they continue to rise or fall. I think for the long term, this is a company that's going to make you a lot of money if you invest into it. So on to the third stock here, Honest, HNST. The Honest Company. So the Honest Company is a penny stock. It very much is. I have $300 in the Honest Company, down 20% right now. I'm currently dollar cost averaging down. This is a very volatile company. They're down 23% in the past 3 months. In the past year, they're down 5%. In the past 5 years, they're down 83%. So off of that, you're probably not very impressed in the Honest Company. I'm not either. But there is things to be impressed about. I think that they do have a very bright future ahead of them. So let's take a look at their earnings presentation. These are what I like to look at when I'm investing in these companies, to see their metrics. And, they have to tell the truth in this. They can't sugarcoat anything. It launched in 2020 or 2012 with the goal to create a new personal care company with clean ingredients and sustainability at its core. The portfolio resonated with a new generation of families. So Honest Company, what they do is they create household products for, babies, for mothers, for anyone. They also are in the skincare space. I love to see that. Very big space, like I talked about in yesterday's video. If you guys haven't checked that out, go see what I was talking about in that one. Elf, very good stock. But anyways, so they offer these, and they offer all organic materials. All these materials are things you'd want to put on your baby or put on your body, or you'd be happy with them being in your house. The Honest Company is a personal care company on a mission to challenge ingredients, ideals, and industries so people can protect who they love. The Honest Company is very impressive in this regard, to the point where I think this is going to be a big thing in the future. I mean, it already is. Like I was talking about with Cheesecake Factory and Flower Child, is the organic aspect of things, and then even Celsius. I mean, marketing towards health is a huge thing. Health is one of the most, if not, it is the most important thing in a lot of people's lives, as it should be. But this is what's offering health. Honest Company is the healthiest company when it comes to these products. So a higher standard of clean that we call the Honest Standard. We see they use clean ingredients, in-house labs, toxicologists audited. So number of ingredients not permitted in products. So Honest actually does not permit a bunch of ingredients. We see they're actually not using a bunch of them. Does this bring costs up? Yes. Does this let them charge a premium? Yes. So they're the number one natural brand in baby personal care. Not a lot of natural brands in that space, so this is kind of misleading. Number one natural brand in baby wipes, that is pretty good. I think there is more brands in that. So there's 7% household penetration. That's pretty big. They are in a lot of Targets and bigger stores, up 20% since 2021. Number one in climate pledge friendly mascara at Amazon, very niche category. Oprah's favorite things, Fam Jams, 4 years in a row. So a lot of these stats that Honest Company has are kind of skewed in their favor. I mean, these are very niche categories, but I do believe, I mean, I'm just being completely transparent, but I do believe that Honest in the long term is a very, great investment. I think that there's a lot of things that they do have. So brand maximization, margin enhancement, and operating discipline. This company has the idea. It's just all about the financials. So transformation pillars delivering strong results. Brand maximization. They have over 10% revenue growth, 7% household penetration. I can easily see this reach the 25% level. This would be a 4x from where it is right now. A little bit less, around between 3 and 4, but I can totally see that happening. Margin enhancement up 900% or 900 basis points right here. So very happy to see that. That's great if they can raise their margins in this low margin space. Operating discipline. Now they have $75 million in cash and $0 in debt. I think what Honest Company needs is a catalyst from a bigger company or a big investment firm, which I think they're going to get pretty soon. Because I compare this company to a company like Procter and Gamble. Do I think they're going to get to that level? I don't know. But I think that they can get, even to a tenth of this company, which is 30 billion. That would 10x Honest Company. So, I mean, you see their market cap is 356 billion, and they pay a 2% dividend. Honest Company's market cap is 394 million. So they could they be 1% of what Procter and Gamble is? Yes, and that would 10x their stock price. So I think that very much is possible for them, and I think that's a low estimate if anything. Because the CEO of this company too was the P&L leader, or the leader, leader at Amazon for P&L, Carla B. Vernon. So this company has good management. They're very impressive in that aspect. Sorry, I've been recording for a while here, but we do want to finish and get through with the Honest Company because this is a penny stock that has a lot of upside potential. The two other stocks, very established, very good companies. They also have a lot of potential, but I think this one has the most potential out of all of them. So sequential gross margin improvement through 2024. They are increasing their gross margins all the way to 38%. Not amazing, but very good for a company in this space. And then we also see their EBITDA profitability that actually hit this in 2024. Very happy to see that. That's always a big catalyst in companies, financial lifetimes. If we go to the all-time, we see that this company was a lot cheaper when they were not profitable. This was a dollar company. So once you do reach profitability, your company does trade at quite the premium because you're probably not going to go out of business anymore. That's a big, flip for a lot of companies. Like you see in SoFi's price, it's been like that ever since. So their 2024 financial summary. It looks good. I'm very happy to see that this company is growing. We see their Q1 2025 results. This is what I'm more worried about. They have $0 in debt. Love to see that. Adjusted EBITDA, they're up 4 million, which is great. Gross margin up 170 basis points, and then revenue they're up 13%. So this company is growing. Their Q2 2025 results also growing, but not as fast. So this company does need to do some things different, but I do think that at the end of the day, this company has a lot of potential, and as long as they get the financial aspect down, which I think they're going to, with considering their leadership, we see their retail partners today are Amazon, Target, Walmart, Kroger, some huge companies. I mean, these are humongous companies, and I think as the population grows, more people have babies, more people are buying diapers, more people are buying things of that sort, wipes and things like that. And as people are more conscious of their health and their baby's health, this company is going to grow. I mean, it's just a numbers game. There's going to be more population. There's going to be more people buying these products. And Honest is the only company that produces and offers these products at this scale. So I'm very happy with Honest right here. We also see they're under distributed, so Honest will scale up eventually here, I think. That would be very good to see as well. I think that Honest is, just very, I mean, this is Carla B. Vernon right here. If you see in the bottom right, the chief executive officer, she is the one that came from Amazon. She's very impressive, done a lot of great things. We see broadly experienced leadership team. All of these companies are in the leadership team. Procter and Gamble, pretty big there. So 2025 and long-term outlook. This is the last thing we're going to look at this video. Long-term algorithm. They're hoping for revenue growth of 4 to 6% annually, which is good in this space because this isn't a high growth space. You need to realize it's hard to scale these companies just like it is with food we saw in the other ones. Celsius's growth rates are, otherworldly. That's a special one. That one's a unicorn. Same thing with Cheesecake with the new restaurants they're opening, but this one is still very small, so there's still a lot of, worries in that regard. But their revenue growth is 4 to 6% annually. I really like to see that. They also have continued adjusted EBITDA margin expansion is what they're trying to do. I like that as well. Reasons to invest, I agree with all of these. We don't need to read those. I already talked about them. And then the appendix. This is their actual financials here, not them trying to make it look better. So EBITDA, I mean, we see a lot of these, costs right here. You guys probably can't see them. My face is over them to the right. Sorry about that. But net income loss is a lot lower than it did used to be, and this company is growing slowly but surely. So, honest company, would I take everything out of my portfolio and throw it in them? No. Do I like this company and do I want to buy this company? Yes. I do want them to be a small portion of my portfolio. I think the 1% mark is a pretty safe bet. Maybe 2%, 3%, 4%, 5%. Over that, I would not do. So it's very relative to your portfolio. How much you want to put in this company, how much you believe in said company, and what the odds are you think you'll make money with it. That's what percent of my portfolio I'd put into a company like that. So yeah, I mean, definitely not the safest play, but also I think it really could pan out. So that's all I have for today's video, guys. I just wanted to offer some stocks that are great buys still, I think, but not in the tech space because, I mean, we see my portfolio is down so much today because I'm so heavy in tech. I mean, my portfolio is, what is it? It's 43, almost 44% AMD. I'm very tech heavy portfolio and I'm fine with that. I think that's a great thing, but you also have to have, money in these other companies. Like, look, I have Cheesecake right here, which is green today, and then I have Nike, which is green today, and then a few other companies. But those companies are green because they're not in the tech space. They didn't get hit hard today. So if you guys did enjoy this video, be sure to smash that like button. Also subscribe to the channel. I really appreciate your guys' support. I'll come at you with a new video tomorrow, as I always do. Comment down below what you guys think, what kind of videos you want to see. Thank you for watching. Peace.